hope everybody had a good and safe Merry Christmas. No matter what you did, whether you got together with people or just did stuff on your own, hope you had a memorable time. Welcome to the last video of this year. So just want to jump right in. I do have a lot this week. Sorry, I thought this would be a short one, but it's just not. General themes we're going to hit on, just a handful of just general news updates that people are seeing across the internet that we want to kind of talk about. And then some general themes that are going to carry on for next year and for years to come, I think. So we're going to kind of work through this. Like always, if you're watching this live, if you have any questions, comments, want to try to heckle me, who knows what else, put them in the comments and I'll do my best to address what you got. So with that said, let's just jump right in with how's the market. So right now in the Portland metro area, lockbox activity for the Portland side. This is every time Jeannie and I go show a house to a client, open up a lockbox, registers a hit. These are the week over week changes, so down almost 10% in the Portland metro area, which if you look from the far right back to just off the far left, we're pretty much on base of where we were this time last year. So activity has been holding steady. So I think this is general proof that there is no pandemic when it comes to the housing market. We're just holding pretty steady with all things except for inventory prices, and I guess all the things that matter. But the activity is pretty consistent. Same story across the river over in the Vancouver side. They're down almost 6%. Same type of thing. They're pretty much on track for where they were last year. So general seasonality is kind of starting to hold true again. So we'll see how long this dip lasts. I'll be more curious to see what January, February looks like from a seasonality standpoint compared to the prior year, just to kind of see what we're looking like for the 2021 version of the pandemic housing market. So there you go. So all things considered, holding steady, at least steady to last year type of rates. A little bit of a decline as we head into the Christmas and New Year season, which should not surprise much of anybody. That said, we were still seeing houses hit the market on Christmas Day. So it's a bold listing strategy, but hey, maybe it works for some folks. All right, I want to go through a handful of general news articles that you probably see these headlines, and I'm just trying to pick the ones that that people you're going to see, and then kind of how does this really relate to the housing market. In some cases, it's what does this really mean, because it could be there's a lot of missing details. The one that popped up just the other day, thankfully for a lot of people, is the second stimulus bill got signed into law with a battery of new carve-outs, mostly related to the second wave of $600 stimulus payments. I believe there's extension of unemployment benefits, the partner bill that went along with it, which caused a lot of confusion for a lot of folks. But in terms of what is or what is not in there, but stimulus has come out. So this is a great thing, right? Where for the housing market, we're all good now, and it's really not, right? What this is really mostly going to help, as you see sort of in the fine print here, it's going to be a big boost for the rental market. So as we talked about throughout this whole pandemic thing, demographically speaking, people who've been hardest hit by this pandemic are people who tend to be in the renter market versus homeowner market, specifically because it relates to things like hospitality, leisure industries and so forth. So whether it's wait staff at restaurants, bars, movie theaters, things that have been shut down or severely impacted from our current way of life. But that said, if you do own investment properties and you've got renters in them, this could be a nice thing. It may give them a little bit of an added cushion and a little bit of an extra boost to help them either whether they're continuing to make full rent payments to landlords, partial payments, doing kind of the best they can. I've heard of a couple of my friends and colleagues who have rental properties who have some homes that they're seeing full rents paid, some seeing partial. They're trying to tread water. So this would be a big thing for that type of homeowner base. Secondly, forbearances. Forbearance continues to decline for the Freddie and Fannie, the lion's share of the mortgage market. We're down to 3.2% of mortgages outstanding are in the forbearance world. Even the Ginnie Mae, which doesn't come up very often, it's a nice decrease as well. So we're seeing forbearances are continuing to drop down, right? They had been in the I think as high as the 8s, and then they got down 7s, and then the 5s, and now here we are at the 3.25 range for the percentage of all mortgages that are in forbearance. So yes, there is the discussion now of if forbearance does not continue on significantly longer, what does that mean for the foreclosure market? I don't think I've got slides in here for this week, but I know we've talked about it in weeks past, which is with record levels of equity in people's homes, that the risk for a tsunami of foreclosures is pretty much nil, because you've got people who are going to be tapping into whether home equity lines of credit to basically borrow against the house to keep themselves afloat, refinance and cash out, or whatever the case may be. People have a piggy bank. They've not been using them the way that they were used in the 2004 to 2006 timeframe, where take cash out of your house and go buy a Forerunner, or a boat or something. In this case, people have just been sitting on it. So now when things get rocky, you realize house is going to save you versus drive circles in the lake. So there you go. So that's very good news on the forbearance side. That said, other things, this one doesn't really hit the news directly very much, except for some of the nerdy places I like to read about the industry, but it is worth noting lumber prices. In this case, if you just follow kind of the blue line, because that's actual prices, this starts from April of 2020 to December of 2020. So this is just an 8-month chart. This is not like a 12-year trend or anything else. This is 8 months, and raw lumber prices have effectively doubled. So we've talked about this in the past, that you're seeing new construction houses are seeing $15,000 to $18,000 added cost just because the lumber is more expensive, nothing else. So if you're thinking about new construction markets, and let's say you locked in your house last year, it just finished being built, everything's good, your prices are locked. The houses are being built across the street from you now are $15,000, $17,000, $18,000 more expensive just because of the lumber. So that $20,000 increase now on that home value that they're having to price those new homes at to make the same level of profitability they did on yours, maybe. And now what that means for you is if your neighbor across the street, if that house is being sold for $20,000 more, guess whose house just went up $20,000 of value? That's yours. So this it's a good thing for pretty much say anybody who owns a house, because as new homes are going to increase in value, it's going to drag everybody up, right? High tides raise all ships. So watch for that, but this does cause a lot of pain and discomfort. Whether this gets better over time, who knows? We'll just have to see. It's a little bit of fire damage to some of the forestry areas. Plus now you've got COVID requirements for a while, so maybe in a few years it settles back down to a more normal run rate. But for now, it's just kind of going nuts. So there's that. The big story that you're seeing kind of popping up, and this one pops up multiple times. Existing home sales are down 2.5%, and this is it's your shock value. Oh my God, home sales are down. Jeff said this is a hot market. What's going on? Now sales are down. Something's not right. Until you read the fine print that sales in November are still 26% higher than last year. So, the fact that we're down in November, yeah, it's still seasonality, right? So December will be lower than November. Wait for that big shocking update that I'll give you next month. That's just seasonality of the market. So your baseline, so I always kind of look at what's the baseline over last year. That's what tells you what this housing market's doing. So yeah, we're down, but whoop-de-doo, month over month, it just doesn't matter, right? Year over year, we're substantially higher. And then same kind of thing. This is one of the dumber ones because you have to get even farther into the story just to even get the truth of what's happening. Existing home sales are declining for the first time in 5 months. Yeah, eventually people go on vacation and want to go put their feet up in front of a fire instead of running around doing housing. So take some of this up with a grain of salt. Seasonality does still rule the day. We'll get to that a little bit though at the very end, as we do have some 2021 and beyond more prediction kind of talks. And I know I'm ready for these to drop off as well, but we do have some more coming up because I do think a few of them are kind of interesting to sort of look at. But and then another article that kind of popped up, and this was kind of a dumb one, I thought, but it's why you should or shouldn't sell your house in 2021. And it was kind of going through things of why you shouldn't do it. Well, it's going to be hard to find your next house. That next house is going to be more expensive. Yeah, and we all sort of know this already. But if you're going to sell your house, the fear is buying is going to cost you more, but you're also going to sell for more. So it's it's a wooden nickel argument at the end of the day. But then kind of reasons they talk about why you should do it are interest rates look great. This is the time to do it. Kind of leverage your buying power while you can, so on and so forth. So within that article, they had one what I thought was a brilliant point. This is a great one. Why you'd want to sell in 2021 is if you've got what's considered to be a starter home. Right, so this is going to be more, let's say a few years ago, 2, 3, 5, 7, 10 years ago, you bought that entry level house. You bought the little ranch, you bought the three bedroom, 1 bath, maybe get the 2 bath, upgraded version. But you've got what was at the time the starter level home. Those entry level homes will appreciate at a faster rate than the higher priced homes. So if that's what you're sitting on now that you bought some time ago, and it could have been just 2 years ago, this would be a great time to sell because those homes are in huge demand. Because as we've seen, prices in the Portland metro area are just doing one of these numbers, right? That the supply and demand throws it all off. You're going to make substantial money. So this is sort of the, you make hay when the sun's shining. If you're in that starter level house and you're considering selling to move up, get a bigger home, different home, bigger yard, whatever the case may be, this is a 2021, I think is a great time. In fairness, 2022 is probably also going to still be a really good time. So I don't think you've got a short-term gun to your head of timing, but I think it is something that I would urge you to at least be considering, at least thinking about your timing and what your strategy is for that next house, because you're on a high tide wave right now for sure. Also, just a quick reiteration, if you are watching this live, if you've got any questions, comments, heckling, put them in the comments. I'll see them on this side. Otherwise, it gets lonely doing these by myself, but that's life. All right, here's sort of the first wave I want to ride of content, and I know we talk about this all the time, but this absolutely matters, right? And this is a national headline. It's off the Wall Street Journal, but we're going to go on a more of a micro focus here in a second. But this housing boom is highlighting the shortage of available land to build the new homes. This is nationally. Now put that in an area like Portland, where we've got the urban growth boundary. We don't sprawl like Los Angeles, thank God. So we have very limited areas where we can build. So it makes it very hard now to say, let's go build a bunch of houses. We'll take the pressure off. Prices exploding. This 1 month of inventory that we're sitting on, we can get more houses available for people. This would be a good thing. Let's go do it. Well, much like the rest of the world, we don't have much because of our good friend, the urban growth boundary. So on here, the beige area, you can just see that's the footprint. That's where we live today. Blue area, I believe, are some reserves. I know you can't read the legend there off to the side. The big part, though, is the green area. This is kind of the likely, probable, or the expansion plans over the years to come. And if you look at where most of this land is, you are west of Hillsborough, Forest Grove, North Portland, kind of going up towards Columbia County more. A little bit to the south, kind of Canby, Aurora, Wilsonville has some areas down there that get developed to an extent, but the lion's share of the dirt is way west and way southwest, with some up to the north. The northern part, if you've driven up there, it's geographically challenged. It's from the hillside and the river, but these are your areas. And so if you want to think about, if people mostly have jobs downtown or wherever, Nike, a lesser extent Intel, but those closer end companies, if you're having to live west of Forest Grove to get an affordable house, you're probably not going to want to drive into to downtown Portland. So you'll look for max lines will expand at some point, and that'll sort of help. But that the future growth is way out, which means homes that are closer in are just going to rise in value probably that much more, is my prediction. Excuse me. My second prediction, if you're looking to make a 50 to 100 year bet on real estate, Hillsborough. So I continue to say that. I have no scientific logic in that other than I see where the expansion is poised to be. I know where Intel is. I know where you've got the big tech hub and quarter out there. Hillsborough already has a core of infrastructure in place. There's a lot of development to be done, but I could see Hillsborough in time becoming sort of that twin city effect, if you will, of downtown, and mimicking a secondary large-ish downtown-like hub, mostly for tech and related companies. So we'll see what happens long term. 100 years from now, we'll check in and I'll see if I'm right from the other side, I guess. But that's my guess. We'll see what happens. But that's our growth boundary. So now you look at kind of the Oregon new construction, and this was put out by the Oregon Office of Economic Analysis, and they wanted to kind of look at this goes back to 1975, where you can see the level of new construction of what's happening for single family and multifamily. So the dark blue line for what we tend to talk about here, I've got a handful of investors that want to talk multifamily, but most of us watching this video, it's a single family focus. So you see the big run up leading to the Great Recession, you see the big recession dropping off, and then you see sort of that recovery line. So if you go back, say, to 1975 to draw a line the same way we're going to 2000, it doesn't matter to me, and draw what's that average line. Where's the average building levels for the Oregon state? It's going to be far higher than what we're at now, meaning we've got that shortage of housing supply and we're just not building to keep up with it. So part of that's a function of the urban growth boundary, keeps us constrained, at least for Portland. Part of it is you had a number of builders exited the market in the Great Recession, and by exit I mean went bankrupt, left, or otherwise just failed to participate going forward. So so we'll see what happens long term, but definitely we're down. Now that said, this article came out highlighting U.S. cities that are investing the most in new housing in 2020. Right, people are recognizing that your construction is down. Who's really putting in the focus to get those high levels of construction going? So that said, the 12th highest region investing in building is our beloved Portland, Vancouver, Hillsborough area. A lot of this is going to be from the Vancouver side for sure, because there's a lot of construction happening up there. But if we want to take it for what it's worth, we are number 12 in the nation in terms of regions that are recognized as putting the most into it. Now, this might get a little small to be able to read, but the total new housing starts, kind of the second bullet point down, 16,000, call it 800 new housing starts. Half of those are for multifamily, a little over half, actually 54%. So if you boil that down to what does that mean then for single family home construction in the Portland, Vancouver, Hillsborough area, what are we looking at? You're talking about having houses of about 670 a month on average, kind of new construction starts as your monthly average. And I just deleted my last slide. Oops. But if you go back, last week I had shared the trend line that showed the graph of where we're building now of new housing starts, kind of on average, and where it averages now versus where it'd been averaging, say, for the 10-year window, going back 10, 20 years ago, and we're down 30 some odd percent, 34%, give or take. So we're at that right level, but we're down a third from where we have been historically. So we're 12th in the nation, and we're still 34% down from where we had been sort of on a run rate historically leading up to the Great Recession period. So I think that just sort of highlights the fact that nationwide, we need a lot more houses. Portland's doing great, almost in the top 10 in the nation, and we're still a fraction of where we should be. So this is going to haunt us for years to come. I know you guys get sick of me saying this, but it's supply and demand. The supply just does not get better anytime soon. I think this is a 10-year project. I think it's going to be a long time. Now your big side effect from that now is where do you feel that kind of pain the most of what's happening, and it's affordable housing. So whether you want to talk low income, kind of more special focused housing, if you will, or all the way down to even the first time buyer home markets, the affordable level homes are going to struggle. The dirt's too expensive. Now your lumber's too expensive. We have to build, at least for now, for another year with COVID related restrictions on construction sites. So that one hopefully goes away in 6 months. Somebody knocking on my faux wood desk. But we're gonna, it's gonna be pain points to come for a long time on anything you want to call affordable housing. So let's start talking about kind of 2021 and forward. This group got put up through First American, kind of looking at what's going to create tailwinds for the market through 2021. And I think this 2021 is going to be, at least a 2-year run of what's, these tailwind forces. The biggest thing creating a lot of momentum for the market is what they're calling the house buying power. That's going to be driven from the low mortgage rates, right? As rates are lower, you can afford more, your payments are easier. People will buy, they will buy more, they'll buy bigger. In some cases, you'll see people who say, I'm not afraid to say I bought a house 2 years ago. yeah, I'm going to sell and buy a different one because it's ready for a change already, because why not? These rates are going to stay low for 2, 3, 4, 5 years. So we'll see where that window comes in, but that's a big tailwind. The second one is your new household formations. And that's just an absolutely huge force that's going to come up. If you look at the tailwind of where we're seeing new price or new buyers coming into the market, you're absolutely going to see millennials are going to come in force. You've got all kinds of people looking to purchase homes. And again, sorry, I'm trying to multitask here because I had one chart that just did not get uploaded. So I'm going to see if I can't do this here real time. But the new household formation, what we're going to get here in just 2 seconds, because now I got to, it's the millennials, and I'll show you the wave of what's happening there. House prices, same kind of thing. It's just, as your prices are up, if you own, your equity levels are higher, and it's just going to kind of keep spurring more and more demand. Credit, whether you want to call it a softening, it's still highly regulated. It's still very strict and controlled. This is not 2006 all over again. Don't worry. New supply helping the market. I'm surprised they even put that on there, but obviously it's barely a blip on the radar. But what's going to create a tailwind is average tenure, and that's simply because you're seeing, I think, because of a little bit with COVID, but more so because you've had an explosion in house values, a little bit of stagnation in overall wage growth. You're seeing people staying put a little bit longer. You're seeing millennials and others are staying at home longer before they branch out to go buy their own home. But the biggest part of that is historically, it's always been like a 7-year hold on average for people in terms of you own a house 7 years or so on average, then you sell it and do something else. That number is now up to 10 years. So we'll see what that means kind of long term. And here you go. Here's your millennial growth curve, if you will. So this scale is, this wave is pretty big. Fairly early on, I know it's kind of grayed out there towards the bottom, but the third bullet point, over on the x-axis is 2029. So you start fast forwarding. This thing goes at 2059. You see the wave of buyers that are coming through. So we like to always look back and go, oh, the baby boomers. That was a nice little wave of population growth that's going to fuel a lot of neat things, which promptly kind of turned into, well, now we're screwed when they all retire because they're going to kill Social Security. Well, here come the millennials to save the day. Specifically in this case, they are now entering the home buying phases. A lot of them are buying houses for the first time. Their timing, supply-wise, couldn't be worse, but in terms of buying power and so forth, could not be better with these record mortgage rates. So what else we want to talk about? Let's talk more about 2021. So Zillow's going to put out their bold predictions, and it's Zillow, so most of these predictions are kind of stupid, but some of them are worth talking about, and I want to just highlight on some of these, right? So the issue was home sales growth is going to be the biggest since the 1980s, and we know this by and large because we've seen it, growing fairly well. But the part that is interesting is basically saying for this year, they're saying sales are on pace to grow, almost 6% over 2019, despite the pandemic. We knew we had two month, give or take, hole where we just didn't do anything. But it's been recovering. Net, we're going to see about a 6% gain. They're forecasting almost a 22% growth next year. So if that number holds, and that's their bold claim, and I think that number is high, but God, we'll see. If it is going to be that kind of high of an increase more of sales and transactions happening, factor that in now, yes, with 1 month of inventory for us, anyway, in the Portland area, lack of construction and so forth. For prices, it depends on which side of the fence you're on. If you're a homeowner, love it. If you're trying to buy that first house, holy cow, hold on. Again, this sort of bows into the pick your timing if you're looking to make that first time purchase. Again, if you're thinking about selling that first time home, this is sort of fuel for that fodder that 2021 might be a great year to make your change. So there was that one, and then addressing the housing vulnerability is top priorities. Rent prices are going to increase, so there's going to be a big push, and I do think this one's going to hit pretty hard. Most places, definitely in Portland, because Portland loves this kind of stuff. Of how do we get more affordable houses? How do we get more affordable options? We know that we've already got more than half of our new construction is multifamily focused. So I think we're going to see a big push now for requirements for affordable housing on a single family home basis as well. There's discussions of that at one point where King City was looking to expand. King City wanted to expand to the west and kind of northwest of where they're at, and they wanted to add lower price starter level homes. They wanted to make affordable push, and it's already being met with resistance from people who live in nearby areas that are significantly higher priced, and they just, it's the not in my backyard thing. So those fights will continue. So we'll kind of see what happens. The big one though from Zillow that I thought this was an interesting one. I thought this could be a good one. They're saying the next holiday shopping season is going to be the hottest in recent memory. Yeah, and we already know that. They do talk about with the digitalization, whatever the right word is, online experience for home shopping. How about that? That it helps fuel it because people don't have to go out as much as they want if they don't want to. So now it makes it a little bit more laser focused when they do go out. They already know the house. They probably have done the 3D tours that a lot of us use, and so it's going to help fuel things. And then sort of I know you probably can't read this, but it could be the last of its kind. And what they're talking about here is with this online experience is fueling the real estate market. Plus now sort of the internet of things. We're all working from home. It's easy to get your mortgage done online. You don't have to go to an office for much of anything anymore. They're saying seasonality may become a thing of the past, or that at least sort of that winter off season, if you will, may become extremely dampered in its effect. So this may go from right now the Portland metro area. Our home buying season historically has started in February, and it stays steady through October, November. So you got kind of 3 months off. They're saying this could just result in a point where it's just kind of a constant throughout the year. So that's the big bold claim on that one. I think we're already poised to see some of that. We're not seeing it right now, at least on the showing stats. But as we get some more time under our belts, we can look at sort of the closing trends. This year, I think is always going to have that asterisk. It's kind of skewed from COVID. So we'll see what happens long term. And then lastly, a little story kind of came out with sort of the good and the bad and the likely for 2021. So everyone's rushing to get their last set of predictions in. And basically they're just saying, the crux of this article is you've got the low mortgage rates and then you got pent up demographics. And this is where I had my millennial chart to begin with. But they're basically saying it's more rates are low. They're going to stay low throughout the year, and they're going to stay low for multiple years. But then you got the pent up demographics, it's the millennials, and it's others. It's millennials on top of, hey, it's the work from home population, or if my kids need to be at home more often, this doesn't work for me anymore, or I realize my yard's terrible, and so forth. So, there you go. So those are your claims for next year, for predictions for next year. We'll see what happens. I appreciate you guys tuning in long. I know I went super long on this one, so my bad on that one. Anyway, hope you guys all have a fantastic week this week. Have a great and safe New Year's. Have a happy New Year's. I think a lot of us are going to do hunker down, isolated New Year's, but truly want to thank you all for watching these productions and kind of following what Jeannie and I are doing here. And so from our family to yours, very Merry Christmas. I hope it's had by all, and we hope you have a very safe, very happy New Year's, and we look forward to seeing you all in person soon, hopefully. So